try to decode all of that with Mr. Ramneet Ceigall, who is the CMD of the company. Hi, very good morning, Mr. Ceigall, and thank you so much for your time. Firstly, with respect to your numbers, the revenue growth this quarter has been modest, but the profitability has taken a hit, largely due to the prolonged monsoon conditions is what we believe. But is that the only seasonality that is at play, or there are other factors that are responsible to this decline?
So, first of all, thank you so much for having me over. Yes, it's majorly because of the monsoon. Jammu Kashmir, Punjab, Haryana, and even the Himachal was affected by the floods. And there was some sites like Jalbeda Shabad, which was affected for almost 3 months. It just started 20 days back. So there was a lot of water logging, and even the vehicles couldn't move. So otherwise, things were going very well. And we could have a better revenue last quarter also. This prolonged rains affected us badly.
All right, Ramneet, hi, morning, Kavita joining in. Would like to know, going forward, what kind of recovery now can we expect? What are the margin levers you're targeting?
So, first of all, our margins are intact. Whatever we have guided our investors, it's according to that, it's between 11.5 to 12%. The margin which you see vis-a-vis last year, we have got a bonus of about 18 crores in the first quarter in last year, which is reflecting that our margin has gone down. That's other income. Whenever we get the bonus, it reflects in that particular quarter. So the margins have been intact. Margins, there's no problem. And going forward, our revenue growth as guided to our investors would be between 10 to 15%. So good thing is our new projects have started. Our two Yudha already under construction. We've already started on the Yudha and Dhara Bhatinda package 2. We got appointed on 29th of September. We're expecting another 2 appointed days before 31st December. Then the last appointed date is of VRK 11, which we are targeting before 31st March. With this, all our HAMS project will be under execution.
All right, but along with that, your results indicated a sharp rise in the interest cost as well. What's the trend looking like currently, and what's your target for interest coverage ratio as well as net EBITDA, net debt by EBITDA for FY26 end?
So let me clarify. Our interest at the company level has reduced from 635 crores to 615 crores. Besides giving a loan to buy a CNC for 50 crores, overall we have reduced the debt. And our debt equity ratio has also improved 0.4 to 0.3%. So overall, things are going very well. And next quarter, it is going to improve more.
Ramneet, also about the order book, you have a huge order book of rupees 12,598 crores. Now, just want to know the conversion timeline and revenue visibility now.
So as we always say, we guide our investors, anything between 10 to 15% would be our growth. And we are targeting that, and we'll achieve that. So in terms of the order book, we guided our investors that we will be getting close to 5,000 crore. We've already achieved 3,700 crores, and we still have 4.5 months balance with us. We've already quoted projects worth 14,000 crore, and we should target to bid at least more 20,000 crore out of the projects. So achieving this target is also not difficult for us.
All right, but along with that, your order book, that now includes 21.8% from the renewables and is diversifying into the T&D and industrial infrastructure. Can you provide more details on this one with these newer projects? What sort of a margin profile are they holding up, and how can they contribute in the times ahead?
So typically, whenever we bid for any PPP or any EPC, so EPC, we always have a beta margin between 11.5 to 12%. We maintain that. And in terms of the equity IRR, we should target somewhere around 15%. So maintaining that, we have 11 verticals. If we are not getting projects in road, we can go into renewable. We don't get in renewable, we get metros and railways, transmission and distribution, tunneling, airports. So we have 11 verticals, and we've grown up to 13 states now. So getting order book is not a problem for us. Like I have 14,000 crore contracts already bidded, and our target is only to get 1,300 crore jobs. So we are only considering maintaining our EBITDA levels and IRR at the equity levels.
All right. Do you remain on track to achieve the guided 15% revenue growth for FY26? And what segment you think is going to be the key driver here?
So 10 to 15%, what we've guided, yes, we will try to achieve that. And renewable is a good sector to be in. We are targeting to get some turnover in the renewable as well, because our PM Kusum Maharashtra project has been awarded. We are just waiting for the PPA to happen. Once that has happened, the execution will start quickly at the site. We've already started the preparatory works, and we are really looking forward towards more hybrid projects or solar projects in the near future. And the margins will be intact, like I said before.
All right, all eyes on that. But with this, Mr. Sehgal, we let you go. So good having you on the channel today. Thank you so much.
All my pleasure. Thank you for having me.